Welcome to the Market Frontlines. I'm Lyndsay Malchuk. Forget the noise. This is not another gold story built on recycled press and empty promises. This is a look at Desert Gold Ventures, a company sitting on what could be one of West Africa's most explosive discovery plays. Now, GBC AG's latest report calls it for what it is, an asymmetric upside, high-impact catalyst, and the kind of torque that can move a market when the data starts hitting the wire. With me is Matthias Greiffenberger, senior analyst at GBC AG, whose recent research has turned this quiet explorer into a serious conversation among institutional investors. Matthias, great to have you with us. Welcome back.
Thanks for having me, Lyndsay.
Now, your report calls Desert Gold's Côte d'Ivoire project a dual asset platform with asymmetric upside. So let's cut to the chase on this one. When you say asymmetric, what kind of real world leverage are we talking about for investors at this stage?
Yeah, as you said, it could be a real asymmetric story. It's a small base for even modest technical success could translate into major market responses. The current valuation barely acknowledges the potential in Côte d'Ivoire. So there's a lot of talk built into the equity if the rocks cooperate. So investors basically get two engines under one roof: the discovery stage exploration story in Côte d'Ivoire and the de-risked foundation in Mali. So there's a balance. That balance gives both excitement and substance. So it's the classic exploration setup, limited downside because of existing assets, and the open-end upside if discovery momentum builds.
Well, I mean, they have a $20 million market cap with a $9.5 million project value on paper. I mean, that all sounds conservative. Yeah, you're mapping scenarios that could re-rate this several times over. Can you unpack that a little bit more for us?
Absolutely. So there is some early stage uncertainty built into this project, and it's in practice, each new data set tightens the picture and steadily increases confidence into this project, and the odds improve as evidence builds. So that is probably not properly priced in at the current stage, and what sometimes look like a region bias is usually just market cautious at early end of the curve. So results could erase that quickly.
Okay, so you've modeled 4 discovery outcomes: no discovery, small, mid, and large. But there's the question no one is asking, and I wonder why that is. I mean, how much of that 55% no discovery probability is a reflection of pure geology, and how much is market skepticism towards West Africa's explorers? I mean, are investors undervaluing the actual probability of success because of a perception risk rather than data?
Well, that's basically just a starting point, and after that we can change that with more success if there's some data coming up. And investors tend to forget how sometimes sentiment flips once the technical story becomes clear, and especially West Africa has proven that again and again.
Now, Matthias, you've actually drawn comparisons to some pretty heavy hitters here. Papillon, a Cardinal, Roxgold, all of which they've seen multi-$100 million outcomes. But in your professional view, what specific early signal would tell you that the Tiegba project might be on a similar trajectory? I mean, is it soil continuity? Is it magnetic structure or early air core results? I mean, what's the one technical data point you'll be watching that could flip sentiment from speculative to strategic here?
So currently there is no reliable data on that, but there are first signs of consistency, the results that hang together, not isolated spikes. And when surface work mapping and early drilling all point in the same corridor, that's when things start to look real. And you want to see data that tells one clear story: structure, soil, magnetic lining up in a way that makes geological sense. So when those pieces start falling into place, then the market will recognize it very quickly.
Okay, so what about your noted point where you did note Desert Gold has no debt and modest corporate burn, but limited treasury of about $1.1 million. So while this team is clearly capital efficient, the elephant in the room is funding. How do you weigh the dilution risk against the value creation potential here? And really, further to that, at what point does the credibility of execution start outweighing the balance sheet concerns?
Well, in my opinion, the company has been very deliberate about sequencing and spending just enough to answer the next question before raising more money. And they are funding milestones, not just to time. So that keeps capital focused on technical progress rather than just overhead. And the earn-in terms for Côte d'Ivoire are designed to minimize upfront cost and preserve flexibility. And in comparison to that, the Mali project provides a foundation. It's a tangible asset that can anchor valuation or even attract partners down the line. Also, management has a lot of skin in the game and a history of capital discipline, which gives investors comfort that dilution will be used to build value, not just gaps.
Okay, Matthias, and finally, let's pull that a little bit further then with that optionality there. Your base case puts combined asset value, Mali plus Côte d'Ivoire, at roughly $63.5 million, implying a 6-time upside from current levels. So what catalyst between now and the end of 2026, we'll say, do you see as true re-rating moments? What's the sequence of events that shifts this from undervalued explorer to acquisition target?
Yeah, that's the next few quarters will show that and give full visibility of the milestones. And you've got results from soil and mapping work, which start to frame the story, and then drone magnetics will shape in the structure picture and point to specific drill targets. And then the first round of air core drilling is the real gateway. That's when we could see the first indication of mineralization in bedrock. From there, follow-up RC drilling could deliver the kind of intercepts that grab market attention. So basically, that's the part where you really want to look out up. And on top of that, the Mali project continues to evolve quietly in the background, adding stability to the story. And if you look into the press, the Mali government is coming back to their senses. So I think Mali becomes more attractive again to investors. So basically, overall, it's a well-timed sequence, steady technical progress with multiple chances for news-driven re-ratings. And we will see that if and when the data unfolds.
Well, I mean, Matthias, it's always a great conversation when you come on. I am so grateful for your time. We're going to end it here, but I'm sure that we're going to have you back soon for more conversations. Thank you again.
Thank you, Lyndsay.
Again, that was Matthias Greiffenberger, senior analyst with GBC AG, breaking down his latest report on Desert Gold Ventures, trading on the venture under the ticker symbol DAU. And you can read GBC's full analytical reports over at gbc-ag.de. Now, for investors watching this space, the message is simple. The risk is real, but so is the leverage. And the next phase of data from Tiegba could decide whether Desert Gold stays an overlooked junior or becomes the next name on the acquisition board. And here comes the disclaimer. These are the opinions of our O with possible vested interest in any of the companies we speak about. Know your own risk tolerances and always be sure to speak with your licensed financial advisor for any investment decisions. For a full copy of our disclosure, head over to apaton.com or over to gbc-ag.com for their full disclosure. I'm Lyndsay Malchuk, and this is the Market Frontlines, where the stories are raw, the stakes are real, and the market always listens when the numbers start to move. We'll see you next time.